This is the Friday, January 29th, 2016 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Now, we didn't get a chance to discuss the cotton market on the show this week. Down $1.32, a relatively large market, or large move for that market. A sign of a bigger trend developing in cotton, or more of the same?
I think it's more of the same. I don't see, I think, cotton's exports sales are down about, at least 20, if not 27% actually, and from the 5-year average, and that's kind of a disappointment. It's an oil seed. Global economies might be hurting us a little bit there. China's economy, if we can start getting it to percolate, but hearing the Bank of Japan putting their interest rate by surprise, because just the 21st of January, the president of that bank said that he was going to leave interest rates alone and leave them stable, and instead he lowered it to a minus 0.1%. So immediately that triggers money moving out of the yen. And where are they going? The safest haven into the US dollar, and also kind of rallied our stock market with it too, because money's looking for a place to be better than where they're at. They don't want to pay the bank to have the money there.
Right.
So, what it also said was he didn't have confidence enough in his own economy, that it hadn't been moving well enough. And let's face it, they're big cotton users, for clothing and what have you. And the same way with clothing coming out of China, cotton's a big thing. And China had really, at one time they owned, I think maybe, or controlled 80% of the globe's cotton. Well, they've been working that down. But over time, that's going to change. And I suspect this is a year where we see cotton acres kind of drop off a little bit, maybe go to soybeans.
Okay.
I don't think it goes to corn. I think it goes to soybeans this year.
Okay, absent of weather, there's not a whole lot to talk about in the cotton market, the way she stands.
But, markets have a way of kind of eluding you to sleep, and then all of a sudden they waken, and you're not there.
That's right.
And, of course, they manage to get all your wares before you know it. And that's the same thing for the corn farmer and the bean farmer.
Right. Your wares are your money. They'll take it somehow.
That's right.
Now, speaking of taking your money, it's political season.
That's
and we've
right.
got all of those politicians here in Iowa. We tape this show in Iowa. Caucuses are Monday, February 1st. They are literally everywhere. And we've got a question from Lori in Cotter, Iowa. She wonders, do you think it will make any difference in commodity markets who wins the Iowa caucuses?
No.
Okay.
I don't.
Yeah.
I think that if we were worried about corn, maybe Ted Cruz might be a concern. But no, I don't think it matters at all.
Donald Trump's not going to make corn great again if he wins the primary.
What? I shouldn't even say what I want to say.
That's all right. We'll leave it there, Sue Martin. We don't want to get you in trouble. And you mentioned, actually, the renewable fuel standard. And so we've got a question from Carrie. Carrie wonders, what are your thoughts on all the negative talk on lowering the RFS? Is it something the trade is weighing as we sit here today?
I don't think so.
Okay.
I think their focus is on other things, farmers selling for one thing, weather in Argentina, concern about the slow harvest that you're getting in Brazil. It is running a little bit behind, maybe about 2% right now from what it was a year ago, but it's an El Nino year, and if they start to turn wet, all of a sudden that's going to delay that harvest even more, and that crop went in late. That means saffrona corn goes in late as well, and by the time you get to the first week of March, you're tripping on a banana peel. Okay. It'll become a concern. So I think that keeps a little bit of a support under the market for corn, keeps us from falling out the downside, but on the same token, unless there's something really diehard down there, you've got to look at Brazil. They're still going to have a record crop of beans. Yeah. It's just that it isn't the 102 high that some were talking, and the USDA stands at 100. But there is an issue there, and demand seems to be still growing for our commodities.
And that's an important point to make as we look at these massive global supplies of nearly everything we grow, and it kind of leads us right into Adam in Mount Pleasant's question. He's wondering, at what time do we start locking in a fall price for corn and beans? Nobody wants to get caught sitting on their hands like some producers were last year When do you begin that process, Sue?
Well, if we were to rally into May, which I don't see us doing, but if we were, I would take advantage of that. I would start to get some done. I think this is a year that is totally different than a year ago. A year ago, you know, you had these EKG blips. This year's going to be a stair step, a work in progress. Okay. So you're going to have more than one chance, I think, this year. A lot of it, I think, is going to be related to weather. And I think it comes in the third quarter.
Really?
I think
so
that's where your better times are.
You're going to have to be waiting.
Yeah.
Okay.
Yeah, that's why I said on the show, get your calls bought back.
Right.
And you can do some pretty reasonable buyback on the board, you know, like buying September corn 380 calls and selling the 440s. Mm-hmm. And then, granted, as the market goes up, I think today we did some of those for around a little over 11 cents.
Okay.
So, you know, or maybe a little more than that. Maybe it was 18 cents, something like that. But we managed to take 10 cents off before by selling the 440. Once the market crosses 402, you're crossing a barrier. And then that should have your attention. Then when it crosses 417, 420, it should have your attention again. And by the time you get going there, you're going to know something's afoot and what's happening. And then you'll have to say, okay, now am I happy with the price enhancement between 380 and 440? Because you won't get any more than that, less the cost you put in. Or should you maybe buy back that 440 call and roll it up to the next level of resistance if we take that area out, and then walk the market up as it goes? You can do it that way. Yes, you pay more commission to your broker, but you know what? There's a price for everything.
Right. And it lets you make some sales on the physical. Maybe you make some contracts as you're close to break even, and then leave that upside open.
And then it gives you the comfort zone to go ahead and make those sales, knowing you are replacing back just in case. If the market goes down, well, you're going to be glad you sold those 440 calls. Mm-hmm. There's margining a little bit with them, but not a much because it's a call spread. So you'll be glad you sold those, because if the market goes down, then you're not going to lose as much of your premium as you would have if you'd have done outright calls, which would probably cost you around 28, 30 cents.
Okay. All right. So an attractive way to bring that cost down.
Yeah.
Now, we've got a question here from a longtime fan of the show up in Ontario, Canada. This is from Phil.
Good for him.
He's asking about biodiesel. We've seen bean oil drive this, or at least be a driver in this soybean complex, and he's wondering, does biodiesel offer hope long-term for bean prices?
Well, I kind of think it does. Long-term could be longer than I'd like.
Okay.
But the bean oil market is your better market for the bean complex this year. Palm oil is down. It made 19-month highs here, and just this last week, and then sold off because supplies are tight because of El Nino. You've got India having to import a lot of veg oil this year, or is expected to, because their weather's been so poor. And so I think when we look at the bean oil, it's the market that's going to be good. Now, granted, you're going to have Argentina to contend with, but the next thing is crude oil. What's happening to crude? We got down to 26.10, 26.09 on the Feb contract before it expired. There was some support there in that area, and the market has bounced. Maybe we bounce enough to get up around $40. We might. The bottom line is, the way I see crude oil, I do not believe crude oil gets under $20. I think we're going to have, so when you got around that 26.10, you're not super far away for the way that market moves. I think crude oil is going to be a surprising market. I think it's dirt cheap. We're letting the rest of the world, you know, produce and ship, and we're saving ours for when we need to. I think in time, even a year ago, in the Ag Forum Outlook that in February that the USDA did, people should read those. They're very good. And the USDA predicted that we would see grain and crude oil prices drop through last year and into this year. They also predicted that by 2024, we'd see $120 crude oil again. That's only 8 years away. Yeah. That comes pretty fast. So maybe buying ETFs, USO, you know, that way was like $119 a share. Sure. Down to $8.97, something like that now. And it's the U.S.'s largest oil ETF. Crude oil ETF. Yeah. So that way, it's a hedge against increasing prices. Get some fuel locked in down here, you would think, your farm diesel. It's good for the farmer, good for the consumer.
It is. It's
helping put a little more
such
money in their
a
pocket.
bearish factor for
I
those
know.
outside investors to look at.
I know.
But we heard some good news, Sue. We've got something to look forward to.
Oh,
as we
there's
look
so
to the
much
future.
more.
All right. Well, Sue Martin, thanks so much for joining us this
Thank
week.
you.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.